Consolidated statements of financial position as at 31st March 2021. Non-current assets, PP, $5,000 plus 1.8. Investments in research, 1.8. Goodwill, goodwill, without the goodwill and neutralize space. Go to the current assets, inventories, $500 plus 100, trade receivable. $520 plus 360, cash. $5.6 plus 400. Total assets, equities, and liabilities. Share capital, share premium, retained earning, NCI, non-current liability, loans, loan notes, 280 plus 200. Trade payable, tax, 100 plus 40. That's all. Immediately after this, what can make me to balance this question? Group structure, adjusted return, I need group structure, adjusted revenue of subsidiary, as per SOFP, he has 1464, 1464. I need to determine the net assets. Determination of net assets of subsidiary items, DOA, DOC post. I need to calculate the goodwill. I need to calculate the goodwill. Cost of investments, add NCR, purchase consideration, net assets, at the rate of acquisition, and goodwill. Then I need to calculate retained, which is the consolidated retained of who of the parents. Consolidated retained of parents is what we consolidate. Or retain of the parent anyhow as per SOP. Then NCR. Date of acquisition. This is what I will put in exam. Immediately they give me the question. This is what I will do. Look at it. To earn some mark. I'll first of all do like this. Then, wow. I'll first of all do like this. Then I will now start posting. I read, I post. I become post now do. After I read, I post. I become post now do. Any question for me? Any question for me? Then I will now go to the questions. My working will follow. Still workings. That's all. Any issue? I will now start reading one after the other. A minute. Start reading. Yes, I will now start reading and be posting. Let's start. Let's quickly run this. Then we'll go to big bots. Then investment in associates. The question says the statement of financial position of Rethink and Reset Limited as at 31st March as follows. Rethink PLC acquired 200,000 shares in Reset on 1st April 2019. Date of acquisition. Date he acquired 1st April 2019. When are we consolidating? 31st March 2021. 2 years. Yes. He acquired 300 shares. Out of how many? Out of how many? We say total numbers of shares in subsidiary equals to values of shares over nominal value. What is the values of shares? 400. Divided by the nominal value, 400. Now acquire 300. 300 over 400 times 100. I think that should give us 75%. 75%. So I'll fill in the gap straight. Group structure. Parents, 75%. NCI, 25%. Good. What next? At that date, return of Reset was 1 million. Return at the date of acquisition, 1 million. Return, don't forget net asset at 5. Return is part of the net asset. Share capital, share premium, retain any other component of equity, and revaluation surplus. Go to the question. Share capital. Which is 400. Share premium. The way I've picked my share capital, 200. Retain any, 1,000. That's all. That is all. So far, so good. That is what the question has said. Additional information, 1, I'm through with it. 2, at acquisition, the fair value of listed property plant equipment was 380 above the book value. Revaluation surplus above 380 above the book value. So okay. Revaluation surplus. When it is surplus, what do? PP debit 380. The reserve. That's all. I will just post it immediately. I will just post it immediately. PP P 380. I'll go to the reserve. Evaluation surplus on PPE. 380. That's all. Next, this addition, this has not been reflected in the financial statements. Additional depreciation on this will be 12,000 per month per annum. Don't forget you acquire for 2 years. So 12,000 per annum for the depreciation. He said it will create additional depreciation, 12 depreciation now. Yearly per annum is 12,000. Then 2 years, because from the DOA to date we are consolidating is 2. So 12 times 2 will give us total depreciation of 24. What do I do to the depreciation? It's a surplus. PPE, credits, adjusted to any absorb. I will debit. That's all. Depreciation. Go to adjusted return. Depreciation. That's all. Next one, 3. Rethink BSC accounting for non-controlling interest by valuing at fair value. The fair value of the goodwill attributed to non-controlling interest is 73. The fair value of non-controlling interest, 73. The goodwill. The fair value of the goodwill attributed to non-controlling interest is 73. This one, I used to wonder, I'll come back to this, because this is the problem why I'm picking this question. I don't know why some people, when they submit their assignments, they just take it as fair value of SCR. So I'll come back to it. Equally within the trade receivable of Rethink is 180. That is owned by reset, nothing in transit. What do I do? No problem. I'll go to, you can know each other, the single entity trade receivable. $180. I'll go to trade payable. Minus 180. That's all. That is all. Next. At the end, I told you that the good related to Reset Limited needs to be impaired by 140. Oh, goodwill has been impaired by 140, and it is fair value. The goodwill belongs to both the parent and SCI. So, impairment. Even though I have not gotten the value of the goodwill, 140. Then the second leg, parent and NCI will share the payments based on the group structure. Based on the group structure, impairment. $140 times 0.75. Impairment. 0.25 times 140. That is the end. That is the end. No story. Then I'll get the net assets. Now they've given me goodwill attributed to ACI. Anytime they give me goodwill attributed, I said we have two options. Option one, you can get the goodwill of the parent using share proportionate method. Now for the goodwill, this is 1980. 1980. Now you are giving me goodwill attributed to ACI of 73. For me to calculate goodwill, I need the total goodwill to be reported. So it's either I get the goodwill of the parent using share proportionate. I was okay. Option one, let me get the goodwill of the parent, goodwill of parents, using share of proportionate method. That is it. I will now say cost of investment. It has been recorded. Go to the question. I need to calculate goodwill. I will remove it. Minus 1/8. Because I want to use that figure for goodwill calculation. I will come here. Cost of investment for the goodwill calculation. 1/8. Add NCI, which is 0.25 times 1980 times 0.25. That will give me 495. 180, 18 plus 495. That will give me the purchase consideration of 2295. I will now list the net assets. Net assets at the date of acquisition, which is 1980, to get my goodwill. Minus 1980. This is the goodwill of the parent, 315. I can use the shorter method. Goodwill of the parents. But they have given me the NCI. I can also use share proportionate method, the shorter form, or I use the shorter form. I will use the shorter form, which is cost of investments, 1/8. Remove parent portion, 0.75 times 1980. 0.75 times 1980. That will give you 1485. This will give me the goodwill of the parents. Minus 18. It will still give me 315. Any of the two methods is okay for me to get the parent. You have given me the NCI. Goodwill of NCI given in the question. Goodwill of NCI, 73. Total goodwill to be reported. But there is impairment. This will now be 315 plus 73. The goodwill to be reported is 388. But there is impairment now, which I will list. This is option 1. Option 2, I said, get the fair value of NCI. Option 2. Option 2. I'll get the fair value of NCI, which is goodwill attributed to NCI plus NCI percentage of the net asset. Goodwill attributed to NCI plus NCI percentage on net assets at the date of acquisition. That's all. What is the goodwill attributed to NCI? 73 plus 0.25 times 1980. That is what I need for NCI at fair value. This method is the best option because it's giving the fair value as at the date of acquisition. Fair value of NCI at the date of acquisition times 1980. This will give me 73 plus 49.5 plus 73. That will give me 568. Is the 568 I will now add to the cost of investment for my goodwill calculation. NCI at the date of acquisition was 568. That is why it's the best option. Option 1 will not give you the fair value of NCI. 568. This one I'm going to say, oh, NCI at the date of acquisition, 568, which is the combination 495 plus 73. I will now add that to the cost of investment to give me the purchase consideration. And that's the cost of investment. Cost of investment, which is 1/8. Add NCI 568. Plus 1/8. That will give me 2368. I will now less the net asset with 1980 to get the goodwill. Minus 1987. 388. It will still give you the same thing, then impairment. Minus 140. The goodwill to be reported, 248. Goodwill at DOC, 248. That's all. Please take note of this. How can we value NCI at fair value? NCI can be valued at fair value In how many ways? 2 ways. But it is fair value 4 ways. Share proportionate 2 ways. That's all. That is all. With this, I can now calculate my goodwill, my 248, so that we move to the next one. By saying PPE, 5,000 plus 18 plus 380 minus 24. This will give me 7,156. Then, other assets, inventory is 600. Inventory 600. Trade receivable, 520 plus 360 plus minus 180, 700. Then 400 plus 356, 756. That is the end. But I have not shared the profits. We need to share profits for the return. It's okay. 1464 minus 24. 1440. I'll bring it down. Share capital, the same. 100. Share premium, the same. 1440. 380. Both of 440 will be shared between the parent and NCI. Impairments, 0.25 times 140, 35. Then share profits. 0.25 times 140. That's all. 0.25. 110. That is it. Next, parent loan. Parent. Financial parent loan. As per SYP, what is, please? Give me the figure as per SYP. What is in the parent account? 140 times. What is the return of the parents?
4384.
4384. Then impairments, 105. Share profits, 0.75 times 440. 0.75 times 440, 330. That's the end. And I say 4384 plus 330 minus 105. 4609. NCI. Please help somebody help me take care of the number. 4609. 4609, please. 568 minus 35 plus 110. 643. That is the end. I can now consolidate. What is the share capital of the parents? NCI 643. What is the share capital of the parents?
2,000.
I'll pick 2,000. Share premium income?
100.
100.
Yes, sir.
Then the return we have gotten, I think it's 6. What is 09? 4609. 10 of the parents. 4609. 46. Then the loan. I'll give me 1480. 1480. 100 plus 40, 140. 312. Plus 356 minus 180. 188. That is the end. I can now sum 7156 plus 248 plus 600 plus 700 plus 756. That will give me 9460. Then I will go to the next one. Thousand plus 100 plus 4609 plus 643 plus 1480 plus 488 plus 140. 9460. That's all. Any question for me?
Hello, sir. Good evening.
Good evening.
Please, I didn't understand how you did the NCI and the goodwill. I didn't get it. The NCI, they told us that NCI attributable to goodwill is 73,000. So I don't understand.
Read that part. We read it.
Sir?
Read that part of NCI.
Okay, they said Rethink PLC is accounting for the non-controlling interest by valuing it at fair value. The fair value of the goodwill attributable to the non-controlling interest.
They don't give fair value of NCI. They say fair value of the goodwill. I said, how can we value NCI? Two ways, sure proportionate. The second one, fair value. How do I know it is fair value? What are the indicators? One, I said they can give me market price per shares, which I will multiply the numbers of shares held by the NCI with the market price. That's number one. Secondly, two, they can give me the fair value of NCI direct. No thinking. I will just speak. As a third one, they can give me the fair value of the whole subsidiary, which I will multiply NCI percentage on the fair value of the whole. Then lastly, they can give us goodwill attributed to NCI, like this question. I say they give me goodwill attributed to NCI. I have two options. It's either I get the goodwill of the parents. But to get the goodwill of the parents is sure proportionate, because the goodwill of the parents is sure proportionate. This is option one. Option one, I'll get the goodwill of the parents. You see sure proportionate method. Then after I've gotten my goodwill, I say there's a shorter way to get that, which is this. It's only applied to sure proportionate. Then I will now add it to the NCI, which they've given me, to get the total goodwill of 388 before impairment at DOA. I say the best option, option two, you get the fair value of NCI, which is the goodwill attributed to NCI of 73, plus NCI percentage on the net asset. Because when it is fair value, NCI is entitled to goodwill, is also entitled to the net asset. But if it is sure proportionate, no goodwill attributed to NCI, NCI only entitled to net asset. This we have established long time ago. I will now get NCI at fair value, the goodwill attributed to NCI plus NCI percentage of the net asset, which is going to give me 73 plus 495 to get 568. Is the 568 I will now add to the cost of investment, because this is fair value of NCI as at the date of acquisition. I will now go to the question. Okay, no problem. 568.
Sorry, sir. I didn't get the option two. Sorry, sir. I didn't get it. The option two.
This is the option two. Fair value of NCI. I will derive fair value of NCI, which is the goodwill attributed to NCI, plus the NCI percentage on the net assets. When do I do this? When they give me goodwill attributed to NCI. To get the total fair value of NCI, which is 568. It is the 568 I will now add to the cost of investment, which is this. $568, I'll add to the cost of investment to give me the purchase consideration. Then I will now let the net asset at the date of acquisition to give me 358. Then impairments, I will remove to give me the goodwill at DOC. That is that. Any other question? Any other question? Please give me 3 minutes. So let's go to the next question. Big but.
Sorry, sir. So now if you now want to calculate for NCI, okay, so it will now be fair value of goodwill, which is 73, plus NCI share of NAA. That is fun. Okay. Okay, step. Okay. Okay, impairment, we remove impairment, share of profits. Share of profits. Okay. Okay. All right. Okay, so now anytime we are giving a fair value attributable to goodwill.
No, goodwill attributed to
Good.
NCI.
Okay, true goodwill attributable to NCI.
Mm.
How we are going to, this is how we are going to do it. We add the,
By God's grace, anywhere in the world.
sir?
By God's grace, anywhere in the world.
Okay, so we add that goodwill attributable to to fair value plus this one, a share of NAA, net assets. Okay. Then we now share the profit, share of profit, if there is no impairment, plus share of profit. Okay.
All those
All
one,
right.
they are normal thing. Sure,
Yeah.
profit, they are normal thing.
Okay, just this, the goodwill attributable, that is the issue. You add it to. Okay. Thank you, sir.
Let's go to big bots. Big bots. Then we now talk about investment in associates. Big bots.
Sir, where is Big Bottle's question, sir? Where can we find that?
Is it not on the platform?
It's not on the, I don't know. Let me go and check.
Okay, let me resend it. If you,
Okay, thank you, sir.
you can see check. You no wonder some people have not done that. Have you seen it?
No, sir.
I have sent. It's there now. Big bots.
Sing. Thank you, sir.
Huh? What is it?
I said, thank you, sir. I've seen it.
Okay. Big bots. Consolidated statements of financial position as at 31st March 2020. Non-current assets. PPE. Investments. And goodwill. After the goodwill, we leave 2 line space. Go to the current assets. Entries. Account receivable. What 3 0 plus 1950. Bank. One 390 plus 0. Total assets. Go to equities and liabilities. Equities and liabilities. Share capital. We have share premium. No. Any. Means here. No current liability. 12% the pension. 82 plus 28. Dividers. Three nine. And current liability. Account payables. Taxation. Five 330 plus 2410 10. Dividends. One 3 plus 1 2. Bank overdraft. Zero plus 1950. To balance this account in exam, what do I need? I need group structure. I'll write it out. I need group structure. Adjusted with the earnings of subsidiaries. Then I need to determine the net assets. Determination of net assets of subsidiary. Items, DOA, DOC, and POS. I need to calculate the goodwill. Goodwill. Cost of investment. Add NCI. Purchase consideration. Net assets. At the date of acquisition. Then goodwill. After the goodwill, I need to calculate adjusted retained earnings or consolidated retained earnings. I need consolidated retained earnings or retained earnings of parents. As per SOFP. I need NCI. NCI. Date of acquisition. That's all. Really, I've done this. I've earned myself a mark. So let us open another for calculation's sake. Let me pick another color here. My workings. I will start reading the question and the post. On 1st April 2018, what happened? Big Bottle Limited acquired the following investments. That is the date of acquisition. 1st April 2018. Following investments. 1 $1,320,000 equity shares in Small Bottle. He acquired 1,320,000 in Small Bottle. I was okay. What is the total numbers of shares? Values of shares all over nominal value. What is the values of shares in Small Bottle, the subsidiary? Divided by the nominal value. What is the nominal value? 10 naira. That is it. What one is it? That is it. And that's okay. To determine the group structure, 1,320 over 1,650 times 100. What is the group structure? Yeah. Somebody should help me. Somebody should help me.
80%.
Parent is 80%. Go to the question. Post. As the hot. Parent. 80%. Good. What does it say again? At the cost of 37,300,000, cost of investment, has it been recorded? How do I know it's recorded? 3 ways. When the question is silent, clearly stated. Third one, no investigation. For this one, it is silent because it move on. It does not tell us it's not part of it. What do I do when it is recorded? I will remove from investments minus, then debit by crediting investments, debit cost of investments for the goodwill calculation. Let me draw the line. That's all.
Sorry, sir, I didn't get what you minus, sir. The
Investment.
minus investment.
I will credit
Sir, what did you minus?
I will credit investment. It has been recorded. Credit investments and debit cost of investments. Have you seen what I minus?
Your cost of investment, is it not 52,600?
Yeah. Says who?
Okay, 27,300. Yeah, I've seen it. Sorry.
You have not seen it because the one we have been doing, the total in that place will be big. You are missing something, which is specific instruction. If I tell you that investment in research is a specific, that's my investment in research. If I tell you that investment, get the logic between the two. Investments, it means investment in subsidiary plus other investment I have. But if I say investment in research, that is my investment, total investment in a subsidiary. But this one is telling you investments. That means investment in subsidiary with any other investment he has. First day of this class, I told you that investment line in group account can be 3. Simple investment, associate, and subsidiary. Like this question, he has investment in simple investments. So many. That is why you are now seeing 56,600. Out of the 6,600, 27,300 is for subsidiary. The remaining are other investments. Next week, you will see associate too. But if I give you a specific instruction, My investment is super crook. It's a specific, that is my investment in subsidiary. Any issue?
It's okay. Thank you, sir.
That is what he said. Question further by saying, when the retail earning of Small Bottle Limited was 12,500, retail earning is part of the net assets. First of all, as per SOP, what was the retail earning? The one in financial statement as per statement of financial position. What is the retail earning of subsidiaries?
8,190.
8,190. I'll put. Yeah, that is it. But as at the date of acquisition, what was in your account? You said 12.5. I'll say share capital, which is 16,500. The retail earning, 12.5. That's all. Next thing is 50% of Small Bottle Limited, 12% debenture at par. Debenture is a loan. You also acquire 50% debenture. Debenture is a loan. What do I do to that? It's very simple. You cannot give yourself loan. You are a single entity. But debenture is a loan. So for the 50% debenture acquired, must be eliminated. Why? You cannot give yourself loan. You are a single entity. You are a single entity. I'll go to the question. What is the amount of the loan he acquired through debentures? Don't forget loan investments, credit minus loan liability. Loan liability, that's all. But I need to get the percentage of the debenture. Just say 50%. Parent is 82, subsidiary is 28. He acquired 50% of 28, 0.5 times 28. Because subsidiary debenture is 28, 14. Minus 14. Minus 14. I'll go and close. Debenture. Loan investments. Minus 14. And I'll go to debenture in the non-current liability. That's all. Any issue? Any issue before I proceed?
Yes, sir. The 1,400. So where do you get the 1,400 from? 1,400.
What is the debenture value of subsidiary.
The venture value is okay, 2.8. Okay. I'm using
Yeah.
8 to
Yeah, quite
okay,
50%.
okay, 2.8.
50% of 2.8.
Okay.
That will give you 1.4. I will
Thank you.
eliminate investments by crediting and loan liability by debiting. Yeah. That is it. I will go to the next question. Next. As I'm reading and posting, what does it say next? Additional information. The fair value of small but limited assets at the date of acquisition were equal to the carrying value. The section of plant who had a fair value of 1/6 in excess of the carrier of the valuation surplus. And the plant had a remaining useful life of 4 years. He had a remaining useful life of 4 years. Remaining useful life of 4 years. What is he talking about? Revaluation surplus. Next, I will go to the question. Let's share. Okay. Let me share solution. Look at it. I'll just come. PPE. We are talking about revaluation surplus. PPE will be debited. 1/6. Then the reserve. And depreciation, useful life of the asset is 4 years. He had a useful life of 4 years. I can calculate the depreciation. I say 1/6 divided by 4 times from the date of acquisition to date we are consolidating 2 years, 800. PPE, credit, adjusted return, adjusted return of subsidiary, debits. That's all. Do I need to do this one in exam? No, me, I will just post. It will concern me. Let's go to the question. Because me, I know this diet, there will be group accounts in the question. So that 20 marks, I want it to be yours. I will say plus 1/6. First one is surplus of 1/6 debit. I'll go to the reserves. Valuation surplus on PPE. 1/6. Depreciation. 800. I'll go to the then I just tell return. Depreciation. That's all. That is all. Nice. Additional information. On 15 March 2020, small bottle sold goods to big bottle for 700 on credit terms. Yeah. The good has not been received by the company as at 31st March. Don't forget, small bottle is the one that's sold to big bottle subsidiary. The good has not been received, and we are not included in the closing inventory. Closing inventory of who? Of big bottle, small bottle sold to big bottle. So he has not reached that person's account. He has not received the goods. But the person that sold it, he must have accounted for it. Just before the goods leave the premises, they must have credit their goods and debit receivable that this money is coming in. So now, they now said no entry in the books of big bottle because he has not received in respect of this transaction. The small bottle limited sells goods to all customers at a markup of 16.1%. Good. The goods in transit, it will have markup of 16.1. Just deal with the fraction that is there. Don't mind them. They want to confuse their enemy, not you. What is the total sales? 700. What is the unsold in transit? 700. What is the markup? 16.1%. In exam, 16.1, remove the 16.1 is just 1/3 plus 1. 1/4. That's all we use. Just take the fraction out. They used to play this point very well. There are no realized profit on inventory. Allow one. Now equals to 1/4 times 700. What is 1/4 of 700? 1/4 of 700.
175.
175.
175. I'll go to the seller's account, which is small bottle. I will debit his account. I will not credit. I will not credit the consolidated event. Even though the goods have not been received, maybe it will come in. It's inventory in transit. This is what I will do. The profit elements. I will now go to the question. It's okay. Inventory minus 175. Then unrealized profit on inventory. How about how do you sell and make profits? That is it. Nice. As of 31 March 2020, the account payable of Big Bottle includes 75,000 due to Small Bottle. The parents want to pay Small Bottle 750. Due to Small Bottle. Before taking into account the above transaction, yes, it was sold in credit, trade receivable. The above transaction, Big Bottle have not received this thing, but the parent has passed. So it's in transit. Trade receivable, trade payable reconciliation that can happen in 3 ways. The trade receivable. In parent's book now, it will be 750 that he agreed that is owing, plus the one the goods he just sent, which is on transit, 1,450. This is what I will credit minus. Then the inventory in transit will enter. Will still be received. I will debit 700. Then the trade payable. You cannot weigh shoulder. He said they have not taken into account the transaction of 700, which is sold on credit. But it's the book of the book, Big Bottle. He agreed that it's owing 750, not knowing to him there is a goods that is in transit of 700. So in this Small Bottle account, that the parent is owing 750, it will be 1,450. Because that one did not know that you are sending money. He did not know. That is that. I'll just post. Any question for me? Any question for me? I'll say trade receivable.
Sorry, can you take this
Let me
this
post
one?
first.
Okay, sir.
1450. Inventory in transit. I'll go to the payables. Minus. That's all. What is he saying? Look at it. This is it. Trade receivable. Before the goods in transit, it was 750. Read the question. You agree with me? Before the goods in transit, it was 750. Because according to the question, Big Bottle does not know that 700 goods is in transit. It does not know. Don't forget, 2 things can be in transit. It's either cash or inventory. What in by the transit is on the road. The cash is on the road. He has not hit the account. Therefore, what is my own duty? In the small bottle that sold the goods, in his own record, his total receivable will be 750 plus 700, which is 1,450. It's what you have known. They will not try to convince you the same principles. The goods of 700 is in transit. And he agreed that he's going to pay 750 to the small bottle. How much you want to pay? 750 plus the new inventory, 700. Total receivable that small bottle we have in his record, 1,450. You cannot say to each other because you're a single entity. I'll do what? Eliminate. Trade receivable, 1,450. Inventory is transit. I will debit it to inventory. The trade payable debit. That's all. That is it. Any issue? Any issue? Okay. The next additional information. Big Bottle Limited had not accounted for dividend receivable from small bottle, but they've made provision for it, not accounted. We are look at it. The proposed dividend can be tested in exam in 3 ways. Dividend proposed. Three ways. The first one is that they say dividend proposed, dividend declared, or dividend. Same thing. It happens in the post-acquisition period. What is my own duty in the exam? Very simple. What am I going to do? 3 ways. Let's start with the first one. First one is proposed dividend. If they didn't say proposed dividend, they can set dividend declared. Or recommend, as the case may be. It will only be mentioned. It will only be mentioned in the additional information. There's no provision will be made in the financial statement. FS. What do I do in this one? Chapa. ignore. That is it. They will only mention it in additional information. It will only be mentioned in additional information. I will just ignore. They will not make provision. Just like if a man says, I want to get married this year. He said, oh, have you rented an apartment? He said, no. What about the money for the marriage ceremony and everything? No. What about our wife to be? He said, no. That what God cannot do does not exist. You take that person serious, you will ignore the person because he has not made provision for those things. He cannot marry. The second one that he can come in exam. Provision will be made in the financial statements. 2, provision for dividend purpose. Will be mentioned in the financial, it will be provided for in the financial statements. If you go to the financial statement, you will see it. And it has not been accounted for. And it has not been accounted for. Question will tell you. They will make provision. You go to financial statement, you see dividend purpose or dividend declare or dividend. They will say, we have not accounted for it to both parties. Question will tell you. But they will mention it in additional information. What do I do in this regard? Very simple. What do I do in this regard? First step. Step 1. Take parents' portion of proposed dividend in the subsidiary. Go to the subsidiary account. What is the proposed dividend do we have there? Let me see. 1, 2. Parent portion is 80%, 0.8. 1, 2 times 0.8. 960. What do I do to the 960? I will now say, retain any of the parents you will credit. Proposed dividend. Debit. That's all. The second one. Third one. Third one. The dividend has been accounted for. The third one. Dividend. Third one has been accounted for by both parents and subsidiaries. Step one. Take parents' portion of dividend on subsidiaries. Then step two, accounting entry to raise. Trade receivable. Credit minus. I will eliminate it. Trade payable. That's all. These are the three ways it can come. These are the three ways it can come. Which one of those give us two? I'll just go to the question. What's dividend? Go to the parent account. That's all. Any question? Any question? Additional information 5. Goodwill arising on acquisition of small bottle limited considered impaired by 20%. I have not known the value of the goodwill. I have not known the value NCI. Those are the two things that will come to my head. But I will show it down. 20% of the goodwill impairments. Say impairments. 0.2 times 20% of the goodwill as impaired. Which I have not known. Next. The fair value attributed to non-controlling interest is 8. NCI. Second leg. That's the end of the question. I am done. NCI is 8. NCI, the date of acquisition. I am done. It's 8. So required. That's the end. Next thing to remember now is to get my goodwill. Total assets now. 16,500 plus 12,500 plus 16, 3,600. Goodwill, cost of investments, 27,200 plus 68, 34,100 minus 3,600 minus 3,600. Goodwill is 3,500. I say it has impaired by 20%. 20% of 3,500. 0.2 times 3,500. 700 has impaired. Wait. Impairment will be shared between the parent and NCI because it is fair value. Parent will now collect impairment 0.8 times 700.
Excuse me, sir, I have a question.
And my sister, finish your money, you ask your question.
Goodwill arising on acquisition of small bottle. This goodwill that we are calculating is at fair value, so it's meant for both parents and NCI. So why are we applying 20% on it directly, sir?
I don't understand. Repeat the question, please.
Number 5 said goodwill arising on acquisition of small bottle limited was considered impaired by 20%.
So the goodwill belongs to both the parent and NCI now, because the second after that one, the question is the fair value of NCI. The fair value of attributed to NCI, fair value attributed to NCI is 68. It is fair value now. And when it is fair value, the goodwill belongs to both the parent and NCI. And when there is impairment, they will suffer it. So 20% of the total goodwill, is a 20% that's impaired. We have not gotten the goodwill, now we have gotten the goodwill. 20% of 3,500, 700, as impaired out of the 3,500 to give us 280. 7 out of the 700, 80% will go to the impairment of 20% of the goodwill. 80% will go to the parent, and the remaining 20% will go to the NCI. That's all. Very straightforward. What is the issue?
No issue.
I mean, you want to say it is the goodwill attributed to NCI. And lie, did not give me goodwill attributed. He wants to play plan. He say fair value attributed to, it does not say fair goodwill attributed to NCI. He said fair value attributed to NCI 68. This is exam. If you go and think it's the first one we do, or straight, come back next diet.
Never, never.
Which will not be your portion. Anybody that made that mistake, it will tell you goodwill attributed to NCI. This one is fair value. The one you are going to get, if you even do it, you get it. you get the C8. Which we can prove. What is the net asset? The net asset is 3,600. Out of the 3,600, we will collect how many percent? NCI will collect 25%, 20%. 0.2 times 3,600. NCI is collecting 6.1. NCI is collecting 6.1. This out of 6,120, out of the net assets. But the 3.5, which goodwill belongs to the parent? 3.5 is the total goodwill. I can get the parent goodwill, cost of investment, 27,300. Remove parent portion. What is the parent portion? 0.8 times 3,600. This will give me the goodwill of the parents. 0.8 times 3,600. This will give me 24,480. I will now say 27,300 minus 24,480. 2,820. This is the goodwill of the parents. Total goodwill is 3.5. NCI goodwill now. Total is 3.5 minus 2,820. 3.5 minus 2,820. 680. You add 680 plus the net assets. If they want to give you an exam, they just say goodwill attributed to NCI 680. It don't happen with that. But it's giving fair value of NCI plus 680. This is the net asset plus the 680. Here you to add it. 6,120 plus 680. It will give you 680. That is how they come about the 680. When it is fair value, NCI is entitled to goodwill, it's entitled to net assets. I can even determine the market price per shares. In case you want to give me the market price per shares. If you want to give me the fair value of the whole subsidiary, that one is simple. Any of the four, if they give you one, you can transform for the whole four. That is fair value. Any of the four, you can transform for it. If I want to buy this company at 100%, fair value of all subsidiary, I'll just say 6.8 divided by 0.2, 34,000. If they want to give me the fair value of the whole company, it's 34, which they will say fair value of small bottle is, the question will give you 34,000. You did not buy 34, you did not buy 100%, you only bought 80. NCI will now equals to 34,000 times 0.2 out of 4,680. A normal thing. Anyhow, you are power when it comes to fair value. Any way they want to throw it, you are there. They never bond them well, you are there. In any exam, this is not only ICANN. Anywhere, professional exam, anywhere in the world, ACCA, FCA, anything. I can send you those who are teaching in UK, they are doing masters. I'll send one of the questions to the platform for you to see. It's the same approach. Next, any other question? Impairment, you have done that. You cannot share impairments. Let's go and check the impairments. NCR, the date of acquisition has given me 26/8. Okay, impairment now. (0.2 times 700). (140). Parent. As per SWP, what is the parent to? Give me the figure. Just tell it here. 8190 minus 800 minus 175.
We are not seeing where you're writing.
I've not written anything.
Okay.
I say as per SWP, give me the written. That's what I said. As per SWP, go to the question. Give me the return of the payment.
34,560.
34,560. Then I just tell it here. Oh God, I just tell it here. Also, I cannot share the profit or loss. I think in this case it's loss. 500. 7215. Share of loss minus 12,500. 5285. Share of loss, no profit. You are collecting 0.2 times the loss, 5285. That's all. You have not even come to my DM and ask question. I said you can ask question physically. You can ask question online. If you meet me on the road, let's talk about group or anything I've taught you. You can ask questions spiritually. You can ask questions, but financially you can ask questions. 8285. Share of loss. What is it? 5,000. That is the end. I'll go to the parent tool too. Share of loss. (0.8 times 5285. 5285. How's that? 0.8. Mm. 5285.
So sorry, my own does not agree with your own share of loss. I didn't get how you get your own share of loss. Please, can you take it again? The loss, the 5285. I got 5110.
Look at this one here. Do you get this one? 8190 minus 800.
8190
minus 175. 7
minus
to 1.
175. 175 is unrealized profit.
Because here now,
Okay. Okay.
then I'll bring it down. 7215, which I've gotten from the adjusted. -7215 minus 12,500, 5285. How is he not agreeing? Any issue again? Any issue? Madam, you did not talk.
No, it's okay. Unrealized profits.
$34,560 plus -60 minus 560 minus 4228. 30, 732. That is it. That is 732. To any of the parents. I'll go there. 732. Party 732. NCI encore. Let's go and look at the NCI figure. 5603. Five, six. That is all. Remaining thing I cannot balance. 82 plus 1496. Three nine plus 1251. Payable. 5710 plus 1730 minus 750. 6720.
No, sorry, sir. Unrealized profit, I thought when the subsidiary that's sold, you take percentage. You don't take the whole thing. It's only when parent is one that sold that you take the whole unrealized profit.
Now the same answer. Sometimes do it that way. You are just wasting your time. Because it is the leftover we are going to share. Get the logic. Sometimes we say, yeah, we subsidiary share the percentage from the unrealized profit, go to ACI. You are wasting time. Go and remove everything from the subsidiary account. Why? Because it's the balance we are going to share. Me and you do business now. We make profit of 1 million. And I say, but we incur costs of 200,000. And I say, let us first of all share profit, 500 share. We now share costs. 200,000 costs we incur, 100. At the end of the day, we still go 400,000. But if you have said, okay, the 1 million minus the cost, 200,000, 800, share the 400, is it not the same thing?
So what you are saying that when there is an unrealized profit, we take it out from a net asset summary.
I did not say net asset summary. I'm
No, when
asking
you are
the
getting
question.
the
When it is, I said some textbook, if subsidiary is the seller,
okay,
they will share it between the parent and NCI, which you said, which I used to see. I say it's a mere waste of time.
okay,
Debit the seller, retain any of the seller, retain any of the seller. If subsidiary is the seller, debit the whole figure from the subsidiary. If parent is the seller, debit the whole from the parent. Then credit consolidated inventory.
sorry, sir,
Again,
can I see where you treated it here, please, sir? Can I see it where it was removed? Sorry, sir, don't be angry. I just joined the class. I didn't start from the beginning.
it's not about you just join the class. You have been reading something.
But your own method is different from what I'm used to. So I'm trying to catch up with your method.
And now, this is unrealized profit on inventory. This is the subsidiary's account. I will
Sir, can I
debit.
see the heading? I'm not seeing the heading, sir. Sorry. Sorry,
I
sir.
just said retain of subsidiary.
Okay.
Because he's the seller, I will remove the money. Then
Okay.
I'll go to the inventory. I'll credit. Minus 175.
No, where I'm not getting it right is where you took it from to NCI. Where you adjusted that you not
I
took
don't
the balance.
understand.
You know, you did the adjustment in net asset summary that you not took it to NCI.
I do not get your point again.
So
You
please,
said,
can I see the net asset summary table?
Shebi is the balance here we are taking to the year. This balance here will go to the net assets.
Okay, yes, it's this place now. This post that you're getting 5285 at date
How
of
do we get
consolidation.
that?
Sir? Because at the date of consolidation in the question, it is retained earnings at date of consolidation is 8190.
There is a depreciation that will supply from it.
Okay, depreciation
And there's
and
unrealized profit on inventory.
unrealized profit. Okay.
That is why we call it the adjust check. We can still adjust if there is need to it. If there is depreciation, unrealized profit on inventory.
Okay, sir. Thank you.
And go to 62,100 PPE. Investments 52,600 plus 48 minus 27,300 minus 14 28,700. Inventory of the parent 6,350 plus subsidiary, which is 52, minus unrealized profit on inventory plus inventory in transit 50,75. Then goodwill 28. Trade receivable 4,360 plus 1,950 minus 1,450 48,60 1,390 That is the end for the total assets. What is the share capital of the parent? What is the share capital of the parent?
43,000.
I'll go to the question. Okay, let me read this one first. Bank overdraft to give us 1950. 13 plus 12 minus 960. 1540. 43,000.
111,985.
Which one? All of them.
Yes, total assets and total the balanced. 11,985.
Like that. That's the end. So take note of what we have done today, especially the no adjustments. What are the adjustments the question tells us with? One, it tells us the adjustments that were confronted in the question. Number one of it is loan in form of debentures. Don't forget, loan must be eliminated by saying loan investments, any form of loan, then loan liability. You cannot give yourself loan because you are a single entity. Two, fair value adjustments, and which is purely revaluation surplus. By saying my PPE debit plus reserve credit plus. Then depreciation that arises on the surplus, depreciation on the surplus, we said PPE credit. Then we said adjusted retained earning of subsidiary debit. Then we talk about trade receivable, trade payable, trade receivable, trade payable, reconciliation. 8, inventory in transit. I would say trade receivable, credit. Trade receivable, credit. The inventory in transit with debit. The inventory in transit. Then trade payable with debit. Then we also talk about unrealized profit on inventory. Question comes to tell me about unrealized profit on inventory. Which said unrealized profit on inventory, seller's account, which happen to be subsidiary, I will debit minus. They're consolidated inventory credits. Then we're also talking about impairment in the question. And treatment of impairment depends on the valuation of SCR. It is fair value. We say goodwill must be credited. Credits. The SCR will collect because you are the owner. And parents' accounts must also be debit. This is it. Then on the cost of investments. Cost of investments, it is cash. Cash payments. And it is recorded. Which, when it is recorded, investments, credits, cost of investments, then SCR, valuation, blah, blah, blah. That's all in the question. Ladies and gentlemen, next week I will not send the voice note of investment in associates, but we have not through with up and down. And some cost of investment, I don't think we have used all. I don't think we have used all the cost of investment finish. So maybe next week, we will see we will start investment in associates, which is the last part of your group account. There are several questions for the exam.